Diana, I want to get your thoughts on active versus passive investing. We know that passive investing is very popular. In fact, I think the ETF industry is pretty much matching in terms of assets now the mutual fund industry.
Yeah, yeah, absolutely. So when you start out on your investment path, we spoke about your core. I think the core has to be passive. As you grow your portfolio. Why I say that is I started out by saying that money is where psychology meets finance. You don't want to take your first bunch of savings and put it in that stock that's going to take you to zero and or blow up on you. Let's say it's a small cap and not work for you. You don't want to shatter your confidence. You want to build a nest egg and you start out with passive. And passive has its pluses and minuses. It's cheap, but it can throw you around in terms of volatility a little bit, but not if you invest in an index. As you grow your portfolio and you go into the subgroup of midterm and small midterm and short term, you can move up. You start becoming more active. I would warn people that if you're going to be active, be ready to spend some time on your portfolio or give it to a portfolio manager to do that for you. Because it's not a short term, you can't just leave it and not watch. But I would start out with passive and move on to active. In active management, you have to spend time identifying what works, not what you think will work in the future. Market goes against you, you need to figure out why are you wrong. So you have to spend some time. So passive into active. And then as we move through our age in the cycle of our investment, we go back to a more less risk as we take off the risk, because active is more risk than passive sometimes. So this is how we move through our age cycle. We take a large chunk of our age and savings and we go active so we can change things, but subgroups, not your whole portfolio, should always be your core holdings.
Diana, what's the biggest risk event that you're watching right now? Is it the debt ceiling? Is it inflation?
The market has been powering ahead despite of rolling negative headlines and some of the stuff that you mentioned. Equities are a hedge for inflation up until inflation is probably around 5-6%. Then it starts maybe becoming an issue. But even then, you can find companies that benefit from inflation. I think the biggest risk to watch right now is policy mistake. The market is used to accommodative policy and help from the central banks and the governments. And central banks and governments have to be very careful as to how they're taking out this accommodation so as not to shatter existing situations. In other words, if policy mistake would be raising rates too fast or tapering too fast before the market is able to absorb it. So I don't think there is inflation yet. I think the debt ceiling will be fixed. We've had the headlines out of China, but the property manager.
Evergrande, yeah.
And so people are worried about whether that's a contagion, but that seems to be working through. So I always watch that there won't be a policy mistake, because that can have some implications.
Yeah, because the market really does hang on policy, the words especially that come out of the central bank, don't they?
Yeah. So everybody hangs on their words and FOMC minutes and what our central bankers are saying, because the market is flush with liquidity. And as you take out liquidity, it's the de facto tightening. And so a policy mistake. Market needs a Goldilocks situation right now, not too hot, not too cold.
Yeah.
Has to manage that. It's not hard. It's not easy, but they're doing it so far.